Hey, this is Matt from InvestiQuant. Today is Wednesday, October 21st, 2020. This morning we saw the markets open pretty flat, and then we've seen some pretty wild swings taking place afterwards. We've had a lot of news headlines that have been coming out, and the market's been reacting to them. So this morning we opened just slightly up. We pushed higher pretty strongly, but then gave back all of the gains early on, and then since then we have popped and dropped a couple times since that initial low made down there just past 11 a.m. this morning. But what I want to do this afternoon is look at what has happened in this type of environment when you're trading in the bottom half of the range like we currently are and still inside yesterday's range. So we've had a lot of wild action, but we haven't really traded far away from where we were at yesterday. And you can see that here in this top left chart of the S&P. We're basically retrading most of yesterday's range. In fact, the NASDAQ hasn't even exited yesterday's range. So we do have a little bit lower low in the S&P. The Russell's been a little bit weaker, and the YM, the Dow, looks pretty similar to the S&P. So let's take a look at this pattern here in Discover. I'll set it up looking at all four instruments, and we'll use an intraday time-based entry of 3 p.m. Eastern Time. We'll set it up as a long exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. For the opening filter, since we open pretty flat, one of the things I like to do when we open flat is just put a maximum gap size, and I'm going to use a maximum gap size as 20% of the 5-day ATR, and then it can be a gap in either direction. But this will kind of isolate the smaller gaps that take place in history. And today's gap size was about 5% of the 5-day ATR. So very flat open this morning. This will open it up just a little bit to give us a few more sample sizes without being a real directional open. All right, next let's add some price action like we're seeing, where we are trading in the bottom half of the intraday range, but we're still within yesterday's range. So to do that, intraday close versus intraday range, I can say as of 3 p.m., we're trading in the bottom half of the intraday range. So I'm assuming that's going to be true at 3 p.m. I don't know that it is. And then I'm also going to say at 3 p.m. we are trading within the prior day range. So I can hit equals next to inside prior range from this intraday close versus daily levels category. And that'll create that price action where you're trading in the bottom half of the range, but still within yesterday's range. And then lastly, I'm going to put us into a similar market environment where we are below a 10-day simple moving average and above a 200-day simple moving average. All right, now let's click view results. And here we go. So these are the results of going long at 3 p.m. Eastern Time, exiting at the close, 4:15 p.m. Eastern Time, when you have a flat open, which I'm defining as a gap of less than 20% of the 5-day ATR. And then after the open at 3 p.m., you are trading in the bottom half of the intraday range and still within the prior day range. This is taking place below a 10-day simple moving average, but above a 200-day simple moving average. And for this type of pattern, it's a little bit more generic, and that allows us to have a lot of samples across the board. So we've got around 100 samples in all of these. The S&P coming in at 88, the NASDAQ 117, the Dow 90, and the Russell 101. So decent sample sizes here for everything. And looking at win rates on them, the S&P is 50-50 on the win rate, so dead neutral there. The others are a little bit weaker. So you've got the NASDAQ coming in at 45%, the Dow 47.7%, and the Russell 46.5%. So those three are a little bit weaker than the S&P. But if you look at the equity curves, you can kind of see they've been weaker here recently. And you can also see on the stats below, the average loss is larger than the average win. On 3 out of 4 of these, the other was fairly close, but average loss quite a bit bigger than the average win here in the S&P. That is true for the NASDAQ. That is true for the Dow. And then the Russell, the average loss is bigger than the average win, but they're pretty similar in size, so not a giant difference between them. But historically, the win rate's just a touch weak, but the losses have been bigger on average than the wins have. So again, like this morning, we saw a pattern that was kind of similar where the win rates were just slightly weak, but the average loss was quite a bit larger than the average win. We're seeing that again with this pattern as we approach the close. So I don't know if this pattern will actually be true at the close. We'll still need to be trading within prior day's range, but within the bottom half of the range. But if that is true, then it would be applicable. So hopefully you found that helpful. Good luck the rest of the day, and we will see you tomorrow.